Okay, finally live here. It's kind of cool. For my first ever video, we are on the 10th of December here, and I'm coming from Granada, Spain. Let's see here. Oh, so I can just share my screen. Hello. And we want to share. Why is it not coming up with my that one? Let's start with the FTMO one, maybe. Or we'll go with that one, like live trading walkthrough share. But if I'm on this one, does it still go here? Is that open? Like, is this still? I tried to set this up on OBS and it doesn't seem to be working. School. Oh my god, okay, that looks trippy. But I think I can change to here. Yeah, so you should be able to see me now live trading. Okay, cool. Now, I want to document me trading the full time. So I'm a bit late because I had to fuck around to set up all of that stuff. But my whole aim for this, I'm talking Scottish, my whole aim for this is to be able to document my entire trading journey at the moment. Nice cup of coffee there. Always get started with that. So let's see here. Was this what I was trying to take yesterday? Yeah, but I never finished that out. And also my entry should have been here on the mitigation of that line, and then it should have been 3 risk to reward. So that one would have played out if I'd have taken it right, which would have been there. Oh, that would have been pretty nice. Anyway, that was the trade that I took yesterday, but I cashed out like here maybe. No, in fact, it was like halfway up before it came back and then went up. But anyway, my strategy was right again. So let's get rid of all the sells, all the buys, all the whatever. That was so nice. I caught that one yesterday and made like $1,000 off it. So gold is my favorite pair. That's this thing over here. I want to try and explain this from the beginning of like, what are you doing? Why are you doing it? So the way that my strategy works for trading is I trade right now between 7 o'clock in the morning. Well, I'm in Spain right now. This is all going to be in Spanish time. So if you're in the UK, which is like who I'm intending this for, then subtract an hour. So if you see 7, really in the UK it's 6 o'clock right now. So yeah, what my strategy is you trade from 7 o'clock till 10 o'clock because that's like the kind of London session open. The market moves a lot. You know, you've got a really good chance of making a lot of money because the market moves so much. Whereas like here's all of last night, you can see it didn't really go up and down much. Whereas here's what was that last Friday? Massive move. What's this? That's New York session, massive move. When's this? That was London session, massive move up. So you can see it's like all the massive moves are probably going to happen during the day when all the hedge funds and all the big banks and stuff are trading, putting in billions and billions and billions of pounds. Whereas right now it's just starting to like hype up for the day. So this is like a kind of good time to trade. I'll get rid of this box and I'll explain everything here. So what we're doing here, this is my higher time frame because I day trade. And what that means is basically with this, you're trying to figure out what is the overall direction of the market. Is it going up, down, or sideways? That's the only way, a couple of ways it can go. So I'm trying to work out this on gold. So I'll close that so we've got more room to see. Put it full screen so there's less random shit on the screen. So up here you can see here's the price of gold, $4,205. I might have actually put men in pounds. Can't remember. See, am I in? I think I'm in dollars. Yeah, £4,206 for what do you call it? I think that's for like 1 kilogram of gold or like 16 out. It's like a certain amount of gold, might be like 1 kilogram, is £4,205. You can see it's down 0.6 and blah 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 blah. And then that's XAU. Why is it XAU? Because the chemical symbol for gold is AU. So it's just like XAU versus the price of USD, the US dollar. 50-minute time frame, and Oanda's the broker. What's that? That's just because I've got it bookmarked. And markets open. So that's what that stuff is. This little bar here is all of my tools of like if I want to draw a long position and then take profits and stuff. Here's the price of it over here. What's this thing? What the fuck? Oh, new tab on trading view. Okay. Settings, I'm assuming. Yeah. And here is all of my time frames. If I want to do like year to date showing this stuff. What was on before, like 5 day? Don't know, custom maybe. Something like that. But anyway, the biggest thing is we are on the 50-minute time frame. What does that mean? It means that every one of these candles is how much price moved in 15 minutes. So it's like 1, 2, 3, 4. That would have been the last hour, and we go 6:30. This one's on 7:15. It will close in probably 3 minutes, I'm assuming, and look down here, 2 minutes 28, 27, 26. This candle will get formed, and you can see that the way that candles and stuff work is just that it goes, okay, at the end of the last 50 minutes, it finished here, jumps to this one, and then this is just how much price has moved up or down. Here's where price started. At some point, it moved up to the top of this wick. And at some point, it moved down to the bottom where this wick is. And this is just where it is now on this little line. Why am I trying to point at it on the screen as if you can see where my finger is? Yeah, it's just where this little line is now. So that's all that candle wicks are. So all this stuff means is just that price came up here and then down here, then up here, then down here, then up, down, up, down, up, down. And that's all that stock trading is. It's just price is just got a number over time. So you might be wondering, what is all this boss? Who's boss? That means a break of structure. And this is on the higher time frame. So what we're trying to do right now, again, higher time frame, what we're trying to do, we're trying to work out the overall direction of the market. So basically, it's going to be, basically, guys, so all I'm saying here is that it trades between a range. So that would have been one here. How do I'll take that off, put the magnet on. Can I add that as a favorite? Oh, whatever. Anyway, so what a swing range is, which is the first thing that we try and work out, is we go, where's a high and where's a low? And price seems to kind of respect that and trade between it. So it's, everyone's got different names for it, like support and resistance or whatever. But for me, a swing range is the highest point. As you can see here, here's the highest point, and here's the lowest point. And I'll get into why they're the highest point, why they're the lowest point in a bit. But for now, just know that like that's the high, that's the low. And basically, if you get a candle closure, so that's you breaking out the swing range. So look at this black candle. You can see right here, closes. Let's make it taller for dramatic effect. Look at that. If it closes above that line, then we have a break of structure. So all that means is that the market is making higher highs and higher lows now. And what we do at that point is once you get a break of structure to the higher end, it means that beforehand it was just trading within I'll take the magnet off so I can draw freely between this range. See, we go down here, we come back up. Like you would expect it to, in that point, until it would come back down here, you'd be like, oh, we're still in the range. So you would just always expect to come back up until you get that breaker structure. Once you get that breaker structure, you're creating a new zone. And the way that you would mark that up is the second you get a breaker structure, you go, okay, what is the lowest point that led to that breaker structure? And the quickest way to find that out if you don't have eyes or a brain is you would go, let's draw a box. Okay, so it's like there's the whole range of the breaker structure. What is the lowest point that led to that breaker structure? So all you do is you draw the box down, and then you go, oh, would you look at that? Here's the lowest point. My laptop's overheating, not a good sign. And battery's dropping, love it. Good old MacBook. Anyway, so you go there is the lowest point there, so that now becomes your swing low. And if you get a candle closure below it, we're in a new swing range. So it's like, well, you could say, well, here's another candle closure. Because we can make it bigger, but did that close below it? No, and there's room for emphasis. It wicked below it. Sure, the wicks went below it, like really far below it, and that's zoomed in state, but nothing closed below it. That line there would need to be below there. So in that case, we're still in our current swing range at the moment on gold. Now, how do we find out where the top is? Well, you just need a significant retracement. My mentor Brad recommends about 100 pips is good. So here we go here. Let's take a little measuring tool. In fact, it will fuck me up if I try and use that. And we go down here, and it's like, well, that's already at 200 pips. Gold's a bit different where you would go here. I know it says 1,000, but because gold is already at like 4,000, you just take off, we move the decimal one to the left, so it's like that's 100 pips right there. That would be 200. And then if you're trading at a one lot size as well, which I'll get into what lot size and stuff are in a bit, just know that one lot size on 100 pips like that would be £1,000. That one would be £2,670. That move right there would be £5,731. That whole swing range, if you call it, would be £8,431. Would it? 800. Yeah, sorry, it would. Yeah, so it is actually just that number is how much money you would make. Yeah. Yeah, one lot size that would actually be like significant money. My bad. So yeah, gold's actually one of the good ones to trade for. Where it's like, yep, that's exactly how much money we make on the right there. £8,431 at one lot size, which is like. And then if you want to double the amount of money, you just change a 1 to a 2, and then you trade two lot sizes. But just remember, at that point, you lose double, and that's the bit that everyone always forgets. So let's go back here, and we'll put in our swing high, my little magnet on, and just like that, we have swing low and swing high. And until price closes, candle closure on the 15-minute time frame, which is a higher time frame, then in that case we are still in an uptrend. Why we're in an uptrend? Because it was a bullish breaker structure. Bullish just means up. So we've got a breaker structure to the upside. So in that case, we are looking for buys. Why are we looking for buys? Because the market is going up, which means we're going to have big moves to the upside, little retracement. Big move to the upside, little retracement. Big move to the upside. So you want to trade with the market, because if you want to be able to try and target the massive moves from like down here to all the way up here, you need to be in for longs, because it's always just going to make like little retracements to go down, get more buy orders, big up, little down, big up, little down, big up. So how do we trade now? We know that overall today in the 15-minute time frame, the market is going up. What you want to do then is buying a discount. So how the fuck do you buy a discount? All that means is put the little magnet back on, snap that up to here, and go down here, and you put it to the swing range. Okay, anything under this green line is under 50%. So say that like that say it represents, you know, the cost of apples. An apple costs £10 here, an apple costs £15 here, and it costs £5 here. Well, you're obviously going to want to buy it when it's at the lowest point, which is down here. And hedge funds and market managers and stuff are the exact same. They just want to buy it when it's low, sell it when it's high, and that's kind of how the market usually works, because people want to have good deals and make a lot of money. And now you might think that's a bit too simple, and it's like, no, it's like that's how simple it is. You've just got to get good at knowing exactly what point in this discount. Because let's, for example, say that you see it here, you're like, damn, it's going up forever. Because like you go, look, here's this massive black candle, and it would be a case of let's do a little bar replay. Shit, where's my bar replay? Ah. Ah, fuck, it's really, is that now? Are we still on gold? No, why has it jumped to a random? What day are we on? 27th of November. Ah, I love you, bar replay, just picking random dates. December 10th, select. There we go, okay. So let's say that we are back here. Okay. And you go and you say, look, it's hit the all-time low, it's going up. You're like, it's going to take it that swing high. And this was me yesterday at 10 o'clock. And what you do is you then get into long position and you go, let's say that here's where the candle finished, okay? And then you say, let's put that bit below previous lows and then target the swing high. One, that's a shit trade. 2 to 2.1 risk to reward ratio. But like, let's see how it plays out, okay? Okay, you're going into your stop loss. Not looking good. Let's put this out. You're in the money, you're in the money, you're God. You're in the money again. Okay, you're still a God. Going up, going down. And it's kind of consolidating, and then you're going, what the fuck, I've been in this trade for 2 days when you could have made money and stuff already. Not, I was kind of hoping that would have got stopped out down here, but that just goes to show you, it's like if you have stop losses at like reasonable levels rather than, okay, you didn't know anything about trading, you just said it like somewhere there to be like, yeah, but look, now it's a 1 to 4.49 risk to reward trade, and you're like, it's the best trade ever. And it's like, you're just choosing random levels and random things. What you want to really do to trade, and how I trade, is you want to find points of interest. What does that mean? For me, I use order blocks. What the fuck is an order block? An order block is where orders were filled to move the market. Oh, that's my mentor. Telling everyone morning all, he's up. So, what is an order block? Well, we're still in the 15-minute. Let me make that bigger. And all an order block is if we go here, okay, Where is the move down that caused this big move to the upside? The most recent one. And I would say that right here, I'll put the magnet on. Right here, this middle candle, that is my order block. Why? Because I like to use the one candle, the pivot candle. I could have chosen this entire little range here and gone for that. That would be the range method, where you go, okay, well, from the start here to the bottom here, that is your order block. Well, I could have actually gone from there to there and said that like that whole region there, once it comes into that bit, that causes a move up. And you'd expect the same thing. Now, let's see. Here as well, I said this is an order block. However, it is not valid anymore. Why is it not valid? Well, look what happened. Price came down into it on the 15-minute and never respected it. If it did, it would have came into it. I'll give a little pen. If it respected it, it would have came down and then shot back up. So now you know again, when it comes into another zone, another order block here, you'd be like, well, it's probably going to respect and go back up, and then there's your buy position. Okay, so it just means that at the moment, I would actually say that is a very valid order block. But for me, again, I just trade the pivot. Why do I trade the pivot candle? Because right now, we could get, and you've got a higher chance of being tapped into the trade right now. And if you didn't look for any other confirmation, you could just say, once I get tapped into the trade, set my stop loss behind the zone, target 3R. That's a nice simple strategy right there. You're not for any key levels, you're just going for a certain amount of move. And you can see that, well, it's not came back into it yet, but it would have gone up high enough, you'd have made your money. However, if you use the pivot candle method, the issue now becomes, well, in fact, you know what I'll do? Leave that there. Then we'll go down to the candle, long position. Let's put it beside it, and I'll show you what the difference is now. Again, below there. Always make sure as well that your stop loss is at least 20 pips. So what that means is if you look here on the right, 4181, you need your stop loss to be at least 4179.584. That is the minimum you can have your stop loss. So if you're trading tiny things, trust me, if you have anything less than a 20 pip stop loss, like tiny little adjustments in the market, and I'll get into what they are, but basically the market will just jump below and you'll be like, what the fuck? It'll wick below, stop you out, and then shoot up, and you'll be like, how the fuck? Like, trust me, 20 pip stop loss, sometimes 25 pip, depending on what you're trading, is like minimum. But anyway, let's go back to here and go same zone. And now where's 1 to 3? There you go. So you would risk 1% of your account. Each one of these would represent 1% of your account. And you would make the same money, but you only need a smaller movement now because you've got a more refined zone. And then if you targeted the same area up here, you've now got 1 to 7 risk to reward trade, 1 to 3. So it would be like in this one, let's see here, this zone, this whole zone would represent, what's that, 892 pips. So you would need to make, if you're trading a 100k account, 1%, £1,000, be 892. So you'd be trading roughly one lot size here, maybe like 1.2 lot sizes to make that work out. Whereas here, you would be trading 455. Yeah, you could be basically trading 2.1. Yeah, 455 times 2.1 would be about 1,000, something like that. So all of a sudden now, this one you're trading 1.2, this one you're trading 2.1. If you want to do it exact, I'd probably just trade 1 and 2 and just leave it like 800 and minus whatever. But I'm not the best trader, so maybe that'll come back to bite me. But you look at these entries and you go, you're trading double the value on this one, and you're looking for a 7 times risk to reward. That would make you what, 14 grand? Whether this one you're trading 1 and you're going for 3, that would make you 3 grand. And it's like that same move, just because you had a refined entry and you followed your plan, would make you 14 versus 3 grand. And it's like, well, there's where the good traders are made, there's where the bad traders are made. And even if you cashed out at the same bit, like you're still risking double for the same risk. So it's like, even at that, Dan, can I get it exact, please? Fuck it, you're getting a 3.3. That would make you, with a 2 lot size, that 3, so 2 times 3, that's still making you 6. Well, just over 6 grand, 6.6 grand in this case, which you're like, fucking hell, for like that tiny move would make you more. But it's like, yeah, because you're following your risk management plan because you've got a more refined entry. The only issue is, in this case, you nearly get tapped into the trade here. And if that was a little bit higher, you're in, you make the money. This one, you've not made the money there. So like, you might not get tapped into trades as frequently, but when you do, you're risking more, but to try and make more money because you have a more refined entry. In fact, the last thing I'll say as well is the only upside to this one is like you've got a lot bigger bandwidth where you can be kind of wrong on price and it might blow past one zone, like say it blows past that low, but it respects that low. Whereas on this one, you've only got one zone of like, if you're wrong on that one, then you get stopped out like that. But the bigger one, the bigger range, is more forgiving. It can be like, well, you're a little bit wrong, but you'll still make money. You're not going to get stopped out here. But that's what you want to aim for over time. Like, as I said, that makes you 14 grand with the same risk. That one makes you 3 grand. It's like, well, what one would you rather for the same amount of movement? Okay, so anyway, let's get into the actual trading plan. So what my plan is basically, because we're in an uptrend, you want to buy low, sell high. And if we were in a downtrend, sell low, buy it back high. So all we're doing now is waiting for price to come back down into one of our zones. And again, it's just an order block, which is the move down that then caused a big move up. And all you're doing is expecting, well, price comes into the zone where it moved up again. You just expect it to move up. So here's a bit of a shitty one, but here, that's another block. And you can see what happened. Price came into it here, moved up. Price came into it here, moved up. Price came into it here, moved up. And all I'm going to do is, see this alert that I've got, crossing. I'm just going to set that alert just above that zone. And you can see it's been respected, been respected, been respected. And I could have got in for that little movement there at, when was that, 6:15? That's before I start trading. 7 o'clock, this is when I start trading. So all I've been doing today is just waiting for this movement. But let's go down to the smaller time frame because I want to show you what you do if it mitigates it. Once it mitigates it, you go like, holy shit, we're in the money. So what you do, here it is here, 6:19, it mitigated it. And I have a very simple trading strategy. And this one actually fits my trading strategy. So what I do is, let me get my little pen, I'll go full screen for it. I'll take off the magnet so I can draw freely. Go full screen. So it would mitigate it. It would go bing, and it would sound like a little cash machine opening up. And at that point, you know what I'll do as well. The bar replay. So let's say it comes into my zone and I go, holy shit. Like, we're in the money. It's time to trade. This is big boy time to try and work out what's happening. What is my strategy? Well, it's pretty simple. What I need is to see, and I'll draw it up here, I need price to come down. And then say this is my zone here. This is that green line. I need it to tap into the zone, and I need to see. Oh wait, let me draw better. Here's my zone here. You know, why don't I use the actual zone? I need to see price come down, higher high, higher low, come down. I need it to have one, sweat liquidity. What does that mean? Well, say the market is going down like it is here. What are you going to do? You're going to think it's going down forever. You're going to get into a sell, which means you would sell up here with your stop loss, I don't know, somewhere down here. Sorry, your take profit down here, and then your stop loss up here. So what is a stop loss? What is a take profit and a sell? It's a buy. You sell it here, you buy it back here. So there's buy orders here. And then as well, it'll retrace a little bit. So what's going to happen? People are going to think, oh, that's it over. They get in for buys here. And what they're basically expecting then is they'll also put their stop loss below here with a sell, because if they're buying it, a stop loss is just to sell out here, and then a buy is just to buy it in here and then sell it out up here. So you've now got sell orders here, and then what the market will do. Sorry, I said that wrong. People expect that like if it keeps going down, there'll be sell limit orders to get into sells down here, because you go, okay, if it breaks past that, like if it's going down here and then it retraces and then it gets past here, like there'll be sell orders under here, because people go, yeah, well, if it breaks past that previous low, it's going to keep going down into sells, and then you've got people with buys putting stop losses, which are sells, underneath here. So it's basically a case of, let me take back all this shit. Whenever you're in this position like that, you can know there's tons of sell orders below here. So what does some hedge fund manager do? He places like £2 billion to sell, to now sweep out all of these, and it's like, oh shit, everyone got stopped out. All these sell orders have been liquidated, a liquidity sweep. So what can he do now? He can now afford to buy into the market, because there's all these fucking sell orders down here. But if not, he couldn't, like, there wouldn't have been enough buy orders for him to fill, because whenever he wants to buy, he needs someone to sell stocks back to him. But before it can just shoot to the moon and we make £1 billion of money, what you need to see now is confirmation of a market shift. This is on the small time frame to show that it breaks above the recent fractal, not swing, fractal low, and I'll need to explain what fractals are in a minute. But basically all you need is that, and my other entry model is it doesn't break it cleanly, it goes up, doesn't have enough momentum in one, and then breaks it. But you still, it's the exact same thing, except now you just go off of that zone, rather than the simple one to go off of is that, and then you just use this, and then it'll probably tap back into that and then go up. Well, if I can draw right, and it will go into that and then up. Because again, how does the market move? High, high, hello, high, high, hello, high, high, hello. So let's see it in practice here, where, oh, would you look at that, like low, broken below. So all we need now is for this to come up, break this high, tap back into it, and then shoot up to the moon. Well, you'd probably say that like that is your range here. So really you need to tap into there and then go to the moon. So let's play it forward. So we've already had a liquidity sweep here of sell orders below here, because look, they've gone down, then back up. That's creating a new high. People are thinking that's the bottom of the market. Look, it was, because I bet you that, yeah, that is on par with there. People think that was a sweep. They'll be like, look, it wicked below the previous low. Now it's going up. People are getting for buy orders there, stop loss below there. And then they've just been absolutely fucking wanks. And look at that. That's what I mean by inducements, where it wicked down of like, if you had your stop loss exactly on there, so that you could have a massive trade in. It'll wick below it and then shoot back up afterwards. But anyway, we've had a break of structure. Now we need our market shift to the upside. Let me actually make it look good. Market shift. Okay. And let's play price forward. So basically, if it comes up and then back into our zone here, why is that the zone? Because there's your candle. So all we need now is for price to go up, break this, come back down, enter into this, and we're getting into a trade that looks like stop loss below here. Is it greater than 20 pips? Yes, it's, well, is it? 23 to 21. No, that is smaller. Why is that smaller? Because 4203.2, take away 2 from this 3 number would be 4201.2, and we are 4201.5. So we need to extend that to 4201.228 to 28. That is exactly 20 pips right there. And trust me, it's like if you don't have it that low, you can get fucked so easy. Then let's see here, 3 risk to reward. You can target high levels, but luckily 3 is just always a good number. Like you're targeting this high, but then you could target, like if we zoom out here, you could try and target the swing highs. Can't even see that. It's that small. And if it went all the way up, you'd have a 1 to what's that, 28, 27 risk to reward trade, which is fucking unreal. Like imagine that and you're trading double or triple lot sizes, like triple lot sizes on 27, that's like 90 grand. On a 100k account, you're like, fucking hell. If you could get moves like that, like you're a god. But for us mere plebs, yeah, we're just gonna keep it small with a 1 to 3 risk to reward. So all we need now is to come up, market shift, and we enter on here. Let's see what happens. Comes up, breaks that, we're valid, and we never got tapped into the trade. And that's exactly what I was talking about with the pivot method, where if you'd used like the full candles here, would you have been tapped in? Well, let's. Yes, you would have. And the nice part about that now, would you have? I think I'm just making this look better than it is. Now you've been tapped in. However, look at the trade, it's 1 to 2.6, 3.4. You can actually move that stop loss up now to 0.445. Don't know what it is with gold, but I always seem to feel like my stop loss is at 445. Dot 452, that'll do. So now we just need to extend that a little bit further up to +3 take profit. And there you go, that's your trade. It plays out from 6:25 until 6:37. What's that? 12 minutes. 12 minutes to make, let's see how much you would have made. 201, so if you're risking 1% on a 100k account, which I do have, you would actually trade a lot size of 5. So that little move there would basically be 5 times 3. Fucking hell, what's that, like 15k? No, can't be right. Trading five lot sizes to risk 1%. 600, no, yeah, sorry. 600 times 3. It's starting to get light outside. And spend, yeah, 6 times 3. Callum, stop being an idiot. 1800. yeah, 1800. What did I say? 6K. 1800 on that, you'd be like, fuck, that was not a bad little day's work. And that's where you want to be, at the point where you risk 1% and then you make money like that. And it's, in the grand scheme of things, that's not much. And it's just a case of, if you can trust your entry model, you're good. Okay, let's jump to real-time chart. Get rid of that shit. Okay, so turn replay mode off. Why is it so light? Don't know. Anyway, so what are we doing now? We're on gold, and we're just waiting for the same thing. We're waiting for it to come back to a 15-minute point of interest, which wasn't a million miles off here. Can I get rid of that random line? Okay. What is this I've got? Nah, nothing more good. So I just need it to come down to this 15-minute point. We could, nah, that's not really, this is where I can start getting greedy, where I'll look at candles like that and be like, nah, that was the up move. It was this downwards candle that then caused that up move. And I was about to be like, yeah, but look, nah, that's where I can get greedy, and it's like, I just don't want to have to wait for price to come back into my zone, because it's like, you could try and get in for a buy or whatever. That's weird. I'm still recording? Yeah, we're good. Yeah, like I could try and get into buy or whatever here, but there's no guarantee anything's going to come from it, because I could get into it and then it actually shoots down because it's targeting this low or whatever. It's like, there's no probability, and even if there is probability, you're not going to get good setup. So it's like, just wait for it to be at a good level, because maybe the best trade right now would be, let's say we got in right here, we just said we're impatient, stop loss below here, and we want to target 3R, same as we always do. Well, now that's going to be like 1,000 right there. What is it? Let's see how many pips that is. Probably quite a lot. 508. So we're going to get a 2-lot size. The other one we would have been able to do a 5-lot size, which would have been nice. And now, instead of making, what was the last one, 1,800 for a tiny move, I think you would make on a 2-lot size for 3, 600. Yeah, because how much is that you would make? 1,500 times 2. Oh, you'd actually make 3K on that. Okay, you'd be like, damn, not a bad trade there if it plays out. But it's like, what are the chances of it actually playing out? Because right now, you can see it's going down, up, down, up, down. Like, it's making lower low, lower high, lower low. It's in a retracement right now. Like, the overall swing trend is bullish, but the internal structure at this point is that it's retracing. So it's like, there's probably a pretty high chance that you don't know how high it's going to go up here, and it's going to get stopped out. And then it'll probably get stopped out and then go higher. And it's just like, oh, you wait for the good, valid, high leverage entries. So everything I've explained here on gold, guess what? We've got 5 other pairs here. My second favorite is probably Bitcoin, Euro USD. Move that to number 2 spot. And so Euro USD, you can see I've marked it up the exact same way. And same day, different shit, 50-minute time frame, same stuff. Where right now we are we are bearish. Yeah, sometimes I get them confused. And you can see here as well, like the price of the euro versus the US dollar is a lot smaller. It's like 1.16 euros equals $1. Whereas with gold, it was like $4,212 is one piece of gold. Sorry, it's the same thing here. 1.1, what are we at now? 1.644 dollars equals €1. So again, all we're doing, exact same shit. We go swing high, swing low, so we're looking for sells here with my strategy. I don't trade retracements, I trade with the trend. We've not had a candle closure below, so we're still in a downtrend. Yeah. That's still there. So 50-minute time frame, let's go and look for moves down that caused moves up. And that was one that I predicted the other day that I think I took. And you only want to do it when it's above this green line, when it's in this grey zone. So guess what we're going to do? We're going to wait for this to retrace. And if you did trade retracements, which I don't, I'm looking into it in the future, but you could just be doing the exact same thing in this swing structure and be like, well, it's going to retrace probably to here or here. But it's like, well, how do you know? And you just do the exact same strategy, but in reverse. Just be like, well, here was the order block that caused the move up, but it's like you're only going to get the small moves here. But overall, I'd say like buy moves, just because the economy always grows, are going to be bigger than sell moves. But I mean, see, when you get days where the market fucking crashes and just goes down so fucking much, you're gonna be like, oh, shut the fuck up. Buy moves are bigger than sell moves. Like, but for me, I don't know. Maybe that's a psychological thing I have, but I always think when it comes into the market, I'm gonna get big buys. I get excited. With our sells, I'm like, this is only temporary. Big buys that break through like old highs. That's when you go like, oh. I remember gold was like that like 2 or 3 weeks ago. Just every single day breaking through market highs. So, what do I think my chart worked here previously? The 15-minute. Could it be more refined? Yes. Where it's like, here's the candle that broke through. Why has this become autistic? Because I'm not in the right setting, that's why. I was trying to draw a new box, whereas I can just move that to there and be like, there, that's your. These white candles are the in-between ones where you change direction. Same with, oh, I'd like to say it's that there. I'd say there are two different ones there where you've got one candle here, and then look at this. I've got an alert, and all I'm going to do is move it above there. So my phone will now ping me just before it comes into that zone. And you want it like just before, because that right there is the exact kind of entry that you want. Pings into the zone. Well, in fact, let's talk about, you could just do off of these zones. You could do sells if you want it to be like, and you'll probably get it right sometimes. Like, let's say you just had a sell. Shit, stop being acoustic. Oh, fucking hell. Let's say that you just had a sell on the very edge of this zone here. Stop loss behind it. I love when it does that and just puts the stop loss where you want it. Target 3R. Okay. Would you look at that? You just made money. Let's find out how much money if you were doing the proper method on a funded account. That is 7.7. Yes, you can see pips are so different on here. And lot sizes and shit. I don't trade Euro USD enough to know, because it's like before on gold it was fucking, it was 1-to-1 for like how much money you make. Now it's like 7.7. I think that would be like the equivalent. Ah, fuck knows. I'm not even gonna pretend, but basically you'd the major money because it just mitigates your zone and goes up. But that's fucking ballsy, because then let's say you done it back here, and now all of a sudden you get stopped out only for it to go higher. I mean, to be fair, it still respected zones. It just respected the zone behind it here of this one. Yeah. It's just like, well, buddy, you traded the wrong zone. And it's like, you can see the market just does the same shit all the time. That's what I love about it. Once you start getting into it, you go, oh my god, I see the patterns. It's like, retracement. Well, overall it's in a downtrend, and then it's like the internal structure at that point was in an uptrend to facilitate. It's like, imagine your car like trying to go up a hill. It needs to always stop to get fuel at a really big hill on like a road trip or something. It's the same. Well, it's the same here with it trying to go down. It's like it needs to go up to gather all the sell orders, sweep them, and now gather all the buy orders, and now you can go in for sell orders. And that needs a retracement down, retracement down, retracement down, retracement back down, retracement. Oh, fractal market shift. Interesting. And would you look at that? Now the market makes higher high, and it's like from here it starts going up, and it was all after here where it closed above a low, and then after here it never broke down, because if it just wicked above it, that could just be a liquidity sweep for it to move even further down. But because it never done that, that makes you think now, okay, you're going into uptrends, and that's when on the 15-minute you would go, oh, where is a move like that? Comes back into it, mitigates it, and what do? Enter for a sell, long position, 3R, that below there, 3 times profit. Boom, basically nearly done already. I'm telling you, once you just do this shit every day, you start to write it in your sleep. And then what you start to realize is that different pairs trade differently. So the two that I'm focusing in on a lot right now is gold, which I would say has been really aggressive lately. What do I mean by that? It's like, see this move? That's exactly what I've seen from gold, where it wicks into it and then shoots up. Gold doesn't stick around for long, and it makes big aggressive moves at the moment. Sometimes I've seen it be a lot like more chill, but right now it seems to be that it comes in and then it will react off of moves quite drastically, and it seems to be like almost quite skittish at the moment, where it comes in moves, but it's like sometimes maybe every like 1 in 4 of these zones that I look at of order blocks, it'll blast right through them. So I've been finding that a lot of the time I've been getting stopped out. And this is where you get into journaling your trades and understanding the markets and stuff, because what I've been finding is that I'll get into trades and then I'll just get stopped out on maybe like 1 in 3, 1 in 4, and I get fucking pissed off. I'm like, fuck, the market hates me. It's like, no, you're rather than trying to wait for one good trade a day, you're trying to get like 4 good ones. Because the reason that you wait for market to come into a zone and then give you confirmation is for exactly that. It's like you want to know that it's got a high chance of going up before you enter. Otherwise, you're going to get into it and then it's going to fucking blast through your zone. You're going to get stopped out. Like, fuck, just lost like 4 grand or 5 grand if you're leveraging, or what should be 1 grand every time. And you lose 3 in a day, you're done. That's you. Go home, sit on the bench, go out for a walk, go to the park, go talk to your family you're probably ignoring, shit like that. Whereas Euro USD, if I get rid of all my autism, thank God for Control Z, Z, whatever, otherwise I'll be fucked. I found Euro USD is a lot slower, and it comes into zones, really tests them. Then the market's got plenty of time to go, oh, let's move you down. It's like slow and predictable, which is nice, but it means that you maybe get like one good big sell a day. And that's what I've been finding, like that now, that move. I reckon if we keep going at that rate, how long is that taking to go from 4 till 8:30 in the morning? You could be going from like 8:30, that could be New York session before I'm trading this. And then that's why it's nice to have other currency pairs where I trade the exact same way. AUD, I've not traded that one in a while because like gold and euro has been enough. Bitcoin I usually only trade at the weekends because when it moves, it fucking moves. And you can make so much money, but also like, what the fuck? If it moves against you, you're just like, why? But it shouldn't have done it. It's like, Bitcoin, don't give a fuck, it's crypto. It'll move up, down, left, right, side to side, do whatever the fuck it feels like. And for me, of my skills and stuff, it's like I'm quite happy with mainly gold, sometimes euro, and I just have this one strategy that I drill day in, day out, day in, day out. And you can see here that hopefully pretty soon we should mitigate this zone down here and we can get in for a trade. And until that happens, sit on your hands, do nothing. And this is where I'd say people fail the most because they go, yeah, but if it's probably going to go up or it's probably going to, like, they just get, they don't actually realize, they don't see what the market's doing. They see what they want the market to do, and then they get in for trades because they're so fucking horny to try and make money. It's like, bro, chill the fuck out. Sit there, have a coffee, go talk to your friends, go make some friends, go hit the gym, do whatever. Because if you get into trades that you shouldn't be in and you're going to lose money, then you have to make it back twice as much. Because you lose 50%, you need to make 100% to make that back. It's like you're making life twice as hard for yourself because you couldn't wait for a good setup. It's like if you need to think of it in months or quarters or years. You know, what's your return this month? What's your return this quarter? What's your return this year? And it's like, oh well, it's 30 or 40% lower than it should be because you keep losing money on fucking dumb trades you shouldn't have been in the first place. Well, it's like, well, fucking stop doing that. You're like, well, I'm trying to make more money. It's like, yeah, your exact fucking horniness to try and make more money is fucking you up long term to make more from making more money. Um, and it's like one thing my mentor was talking about as well the other night was basically when it comes into your zone as well, there's only a few things you can do. There's only four things you can do. One, let me get this. Say it comes into my zone here, and then I see my entry model. I can enter, and it can go down, and I can get stopped out. Okay, that's kind of shit. Or I can enter, and it can go up to my take profit, and I can make more money. Cool. I can also enter and close out early, losing, or I could close out early for my take profit, making some money, going against my trade plan, or I can not enter. And that's basically all you can ever do. And it's because we've not actually got into trade yet, but we can talk about managing your risk and your emotions and stuff. Because you will find, see, when it becomes real money, and especially when I was talking about those thousands of pounds earlier, if you get to the point where you're seeing what was that trade there, 14k, and you're seeing it up 10k, 11k, 12k, you're gonna get to the point where you're like your hand's shaking, your heart's going like, not honestly, nothing else feels as real as trading does when you're in that moment because you will just be thinking to yourself like, holy fuck, is anyone actually in this chat? Nah, I love it. I've just been talking to myself for an hour. Fucking get in, whatever. Still love it. I'll do. Just remember, I started this shit when no one was watching. I was talking about trading for hours on end. But what you want to do, what was I saying? Yeah, you'll notice how your emotions and stuff change because being in a live trade, being up thousands of pounds, you want to close out early. But it's like what that does to your long term success. One, it shows you that you don't trust your trade plan. You don't know your trade plan. And two, it shows that you don't trust your emotions as well. You're so greedy and you're so insecure about trying to make money that because you've not tested your plan, it usually always comes down to like confidence comes from competence. If you've not drilled your plan, you've not back tested it 1,000 times, you don't train the same plan every day, you don't have it wrote out, you don't know what you're doing. It's like, well, if you break your plan, you're fucking everything up because you need to keep using the same plan every single day. And then you go, oh, look, it keeps failing at this one bit. Then you can tweak it. Whether if you break your plan, what have you got to fix? Well, it's like, well, I don't know, I break my plan every day and I trade how I want and I, I, I stop it out at random bits and this and that. And it's like, well, how the fuck are you meant to fix it? It's like, oh, well, usually I go for 1:5 but I found that I maybe only get like a 32% win rate, whereas when I go for 1:3 it jumps up to like 71% win rate. And it's like, well, what do you want? A high win rate with lower money, or a lower win rate with higher one, and then you can actually analyze shit like that and go, oh, and then you get into the stats, and then you can see that, oh, well, I actually keep targeting these kind of zones, and I don't wait for proper confirmation, and this entry model's actually got a higher win rate, and it's like, before you know it, it becomes this fun thing that you play around with, that you can upgrade and advance, and it becomes like you'll find your own trading style and the pairs that you prefer and the times that you prefer and the entry models, or maybe you prefer to do day trading where it's like use the day and then you wait for like the 4 hour confirmation or the 50-minute confirmation, or maybe you don't like the 1 minute, you find it too skittish and there's too many false positives and you'd rather use the 5 minute, but then you maybe only get one trade a day and you hate that. It's like, you honestly, once you get into trading, understanding the basics is only the tip of the iceberg. And then on top of that, you've got like, okay, let's say you just made 10K, how much profit do you take out your account? How much more money do you invest every month back into trading accounts or stocks or whatever? It's like, I love this shit so much, I could talk about it all day, because it's so, that this will change your life though if you learn this stuff and you just practice this shit day in, day out. And we've not even got into the habits and all that stuff around trading. Like, one of the biggest ones is getting to bed early. Oh my god, that'll change your life as well. Like, say if you go to bed, if you know you've got to be up at 6 in the morning to try and make 10 grand that day, well, you know you've got to be up at 5:30 to be trading for 6 in the morning UK time. Then it's like, well, you're gonna have to go to bed at like 9 o'clock the night before to be up and well rested, and also you're gonna be fucking exhausted by like 8, 9 o'clock anyway. And so when you get to that point, it's like, well, Sunday night to Thursday night, you're not going to be saying yes to anything. You're going to be like, bro, if I don't get up at those times, like, I'm just going to be fucked. So it gets you into such a good, healthy habit as well, which I love. Anyway, I'm going to take probably a quick break here. And yeah, we're just waiting for price to hit key levels on euro and gold at the minute. I've kind of explained everything I'm doing with the trading. It'll be different as well when we get into the trading, and it's fun to let it play out. And what I'll probably do is take a break, watch a bit of a trading mentorship video. I'm a fucking nerd for this shit. I love it. And then in the meantime, yeah, just wait for price. Okay, how the fuck do I stop this then? Here we go, stop, live, end stream. There we go.